Well, I mean, the markets last year turned quite negative, both on bonds and equities. And so the share of the capital gains that we usually had on our net profits decline. That's just a market phenomenon which we don't think is going to be seen again in the next years. And it's just how the financial market moves in a year like 2022.
I guess over the medium term, the fact that money is being priced slightly differently these days, to put it as an understatement, means that actually returns on a lot of investments that have been very difficult to get, including, dare I say, anywhere in the bond market, this is going to be a bonus for your industry.
Well, I think, yes. I mean, the financial markets changed completely over last year, and we're heading into a period where although they're normalizing, they will be different from what we have seen over the past 4 or 5 years. But this is good for the insurance business because the higher rates, the higher yields, make our life business, but even the property and casualty business, healthier. So overall, we see these market conditions as better than the market conditions where we have been living over the past 4 or 5 years.
All right, just to round out that conversation on markets, I noticed that the investment yields that you had, the reinvestment yields, were somewhat destroyed by FX headwinds. Are those headwinds on the foreign exchange side abating now because of the weakness in the greenback? Yeah, even the currencies conditions look much better this year than they did last year. As you said, I mean, we had an impact, a negative one, on the 2022 results, but this looks much better now. And we're quite more bullish about 23 contribution from currencies. I bring up the core business. If I look at the commercial as well as the retail and SME segments, both growing like for likes, very similar rate, 14% on commercial versus retail and SME up 13% like for like. At what point do some of these more difficult conditions around the economies of repricing or credit impact either category? The two cycles are very much disaligned at the moment. The commercial cycle is progressively landing to a point where it will stabilize after many years where rates have been increasing strongly. Retail, on the contrary, is coming out of 2 years where profits margins have been shrinking. And then rates start growing up. And we see still this year in 23 a strong path of rate increases in retail. And then we believe that by 24, by the end of 24, retail also will start coming down in the rate of increases. But this will give us very good boost for revenues over this year and next year.